Good day fellow investors, my name is Philip and in this video I'm going to be talking about Citigroup stock. Now if you're thinking about investing in this company, then you need to watch this video first. Today's video is sponsored by Exipure. Exipure is the only product in the world with a proprietary blend of 8 exotic nutrients and plants designed to target belly fat. If you're looking to blast away stubborn belly fat, I recommend Exipure. This powerful supplement contains a proprietary blend of 8 exotic nutrients and plants that are proven to target stubborn fat cells. So whether you're trying to slim down or just want to boost your overall health, Exipure is for you. Now before you invest in any stock, you must do your research. And that's what I'm going to help you with today. So whether you're already invested in Citi or just considering it, this video will provide some valuable insights. Please, if you haven't already, like and subscribe below, and if you enjoy the content, please sign up for my newsletter. The link is in the description. Citigroup is a low-growth stock. While Citigroup may be a large and well-established financial institution, it is not a good choice for investors seeking growth stocks. Growth stocks are those that are expected to outperform the market due to strong fundamentals such as high revenue growth or expanding profit margins. In contrast, Citigroup has had weak revenue growth in recent years, and its profit margins have been squeezed by low interest rates. Furthermore, the stock is already trading at a premium to its book value, which means that there is limited upside potential. As a result, investors seeking growth stocks should look elsewhere. On the other hand, value investors may find Citigroup to be an attractive option. Value stocks are typically those that are trading at a discount to their intrinsic value, which is estimated using various valuation metrics. Citigroup meets this criterion as its shares are trading currently at a significant discount to both its book value and its earnings power value. This means that there is a potential for the stock to move higher if the company can start to generate stronger profits. Please read our blog post with a target price. Investors should also be aware that Citigroup is a highly leveraged company. This means that it has a large amount of debt relative to its equity capital. While this can have some benefits such as lower borrowing costs, it also increases the risk of the stock. This is something that investors should keep in mind when considering Citigroup as an investment. Citigroup is undervalued and people are always looking for financial services. Citigroup is undervalued. The company has a strong growth prospects and its stock is currently trading at a discount to its peers. Citigroup is a diversified financial services provider and is well positioned to benefit from continued economic growth. The company has a strong brand and is one of the largest financial institutions in the world. Citigroup has a large customer base and it can generate significant profits. The company's stock is currently trading at a discount to its peers and is an attractive investment opportunity. Citigroup has a low moat compared to its industry peers. When it comes to competitive advantages, size doesn't always matter. Some of the most successful companies are those that have carved out a niche for themselves in a specific industry or market. These companies have what is known as a moat, which protects them from being easily displaced by larger competitors. While Citigroup may be one of the biggest banks in the world, it lacks a moat. Its size may even work against it since nimbler competitors can more easily steal market share. Furthermore, Citigroup's reliance on legacy systems puts them at a disadvantage when compared to newer banks that are built on cutting-edge technology. As a result, Citigroup will likely find it difficult to compete with its peers over the long term. While Citigroup may not have a moat, it still has a diversified financial services provider. This means that it can offer a wide range of products and services to its customers. Additionally, Citigroup has a large customer base and generates significant profits. These factors make the company an attractive investment opportunity. Citigroup is capital efficient. CAC, or the cost of acquiring customers, is a key metric for any business. It is a measure of how much it costs to acquire new customers, and it can have an impact on profitability. Citigroup is capital efficient, meaning that it has a low CAC. This is because Citi has a large customer base and a strong brand. As a result, Citi does not need to spend as much money on marketing and advertising to attract new customers. Citi's low CAC is one of the reasons why it's such a profitable company. Citigroup has a strong brand. Citigroup is one of the largest financial institutions in the world and has a strong brand. This brand allows Citi to charge higher prices for its products and services. Furthermore, Citi's brand gives it a competitive advantage when competing for new customers. Citi's brand is one of the most valuable assets and is one of the reasons why the company is such a profitable business. Citigroup has a large customer base. Citi has over 200 million customers worldwide. This large customer base gives Citi a competitive advantage when competing for new customers. Additionally, Citi's large customer base allows the company to generate significant profits. Citigroup is a diversified financial services provider Citigroup offers financial products and services including banking, credit, cards, insurance and investment products. This diversity allows Citi to weather economic downturns and benefit from growth in different sectors of the economy. Additionally, Citigroup's diversification gives the company a competitive advantage when competing for new customers. Citigroup has a strong balance sheet. Citi has a strong balance sheet with over 1 trillion in assets and 250 billion in equity. This strong balance sheet gives Citi a competitive advantage when competing for new customers and helps to ensure the company's long-term viability. Citigroup is a global company Citigroup operates in over 100 countries, giving the company a competitive advantage when operates in over 100 countries, giving the company a competitive advantage. We're not competing for new customers. Additionally, Citi's global reach allows the company to benefit from growth in different regions of the world. Citigroup has a history of shareholder returns. Citigroup has a history of returning value to shareholders through both share repurchases and dividends. This history of shareholder returns makes Citi an attractive investment opportunity. Risks. Citigroup is exposed to many risks, including credit risk, interest rate risk, market risk, and operational risk. Credit risk is the risk of loss that arises from the possibility that borrowers will default on a loan. Citigroup is exposed to credit risk from its lending activities. Additionally, Citi is also exposed to credit risk from its credit card and other consumer loans. Interest rate risk is the loss that arises from changes in interest rates. Citigroup is exposed to interest rate risk from its lending and investing activities. Market risk is the risk that loss arises from changes in the prices of securities or other assets. Citigroup is exposed to market risk from its investment activities. Operational risk is the risk of loss that arises from the possibility of errors or fraud. Citigroup is exposed to operational risk from complex business activities. It is also exposed to operational risk from its global operations. Citigroup is a large and complex company and as such is exposed to a number of risks. However, the company has strong risk management practices in place and it is a history of profitable operations. The overall economy. Citigroup will benefit from growth in the overall economy. Citigroup will be able to weather an economic downturn too. Citigroup can offer a diversified mix of financial services across a wide range of markets. Inflation has been on the rise for the last few months and many experts believe that the overall economy is sliding into recession. While there are many causes of inflation, one of the most significant factors is the rising cost of crude oil. As oil prices continue to rise, the cost of transportation and manufacturing also increases. This in turn leads to higher prices for goods and services. In addition, inflation can also be caused by increasing demand for the goods and services when more people want to buy a product than there is available. Want to buy a product than there is available supply. Prices go up. Inflation can also be caused by government policies that result in more money being printed. This increases the supply of money, which then devalues each unit of currency. As a result, inflation is a major concern for countries around the world, and it can have a major impact on the overall economy. In conclusion, Citigroup will be stronger whether the economy goes down or up. In the short term, this is what makes financial services attractive in the downturn. Thank you for watching. We hope you found this video helpful. If you want to learn more about investing in stocks, please check out my newsletter. The link is in the description.